How are federal and state tax withholdings calculated on your paycheck? Imagine getting your paycheck and wondering how the government figures out how much money to take out for taxes. It might seem like magic, but it's actually a clear process. When your employer pays you, they need to withhold certain amounts for federal and state taxes. These amounts are based on your earnings, your filing status, and the allowances or exemptions you claim. For federal taxes, the calculation starts with your gross wages for that pay period. That's your total earnings before any deductions. Next, your employer subtracts pre-tax deductions like contributions to retirement plans or health insurance premiums. These reduce your taxable income. Then, your employer looks at your Form W-4, which you fill out when you start working. This form tells them your filing status, whether you are single, married, or head of household, and how many allowances or dependents you claim. Using this information, the employer uses IRS tax withholding tables or formulas. These tables help determine how much federal income tax should be withheld from your wages. They consider your adjusted wages and how often you get paid. The employer then applies this amount to your paycheck. Over the year, the total withheld should match your actual federal tax liability, based on your total income and filing status. State tax withholding works similarly but varies by state. Each state has its own tax rates, allowances, and rules. The process begins with your gross wages, minus any pre-tax deductions. Then, you fill out your state-specific withholding form, which is similar to the federal Form W-4. This form tells your employer how many allowances you are claiming for state taxes. Using your adjusted wages and allowances, your employer consults the state's withholding tables or formulas. Some states use percentage methods, applying a set percentage to your taxable wages after allowances. Others have specific tables that tell your employer exactly how much to withhold for each pay period. Employers are legally required to withhold these taxes accurately and on time. If they don't, they can face penalties. Employees can update their withholding information anytime if their personal or financial situation changes. It's important to review your pay stub regularly to make sure the correct amounts are being withheld. In the end, the process is about applying the right tax rates and allowances to your wages each pay period. This way, the government collects the right amount of income tax throughout the year, helping you avoid surprises at tax time.